Welcome to the Full FX Unfiltered video series. My name's Colin Lambert. I'm publisher and co-founder of the Full FX, and I'm delighted to be joined today by Lydia Solinski, who is Market Data Product Manager at 360T. Lydia, welcome to the podcast.
Thank you. Hello, hello.
And video even.
It's nice to see people and be seen.
It is, exactly, yeah. One of my things, Lydia, over the past couple of years, and regular readers of my stuff will know that I have things, has been the evolution of the FX swaps market and how it is changing and how it's ripe for change. Now, I wanted to sort of talk to you because obviously market data is a big part of what's driving this change, I think. And also you guys have had the swaps data feed, the SDF. So what role do you think data is playing in this market structure change?
Where to begin? So thank you for having me. Firstly, it's good to actually be around people again, even though it might work virtually, but hopefully in person very soon. So I think firstly taking a big step back and looking at what swaps is and ultimately representing 50% of the market.
Yep.
It's one of the last kind of bastions of FX to kind of go through that revolutionary kind of technical electronification or change. But that's happened, and in my view, and in all the investment within 360T, data is really pivotal within that.
Yeah.
So you had kind of the advancement of the NDF market, the options market, the spot market, and I think swaps is the last kind of part of FX to really receive that kind of efficiency.
There are complexities around the swaps product, which I think we can accept, can't we? But it's, I guess it's dataizing that, if that's even a word. Yeah,
I mean, you're absolutely right, and I think I always kind of make it's quite simple, really, what the problem is. In that, if you look at who holds the cards in the swaps market, you have the brokers, you have the single bank platforms, and you have essentially the ECNs or the kind of multitude of platforms who have the RFS, RFQ kind of widgets within which you can trade. But to electronify anything, to create any algorithm around anything, to create any kind of automation or any kind of streaming environment, you need streaming data. But just by virtue of how swaps are traded, client has to say, please may I see your side in XYZ, and you're showing your hand, and you can't do that on a millisecond basis. You can't go and ask for a dollar turkey price and a dollar ruble price and a euro dollar price every second of the day. So I think before any evolutionary change can take place within swaps, you just need streaming swaps data. That's just the basic starting point.
Yeah. So obviously you guys rolled out the swaps data feed 2 years ago, around there, I think.
2.5, yeah.
2.5, yeah. Okay. I always did miss price swaps. So what impact, what are you hoping to achieve with the SDF? I mean, obviously it's a big part of your mid-match platform as well, isn't it?
It is. So I think there are many elements of change awaiting us within the swaps kind of world. And I think as a team, we sat down within 360T around the table, we kind of decided, right, how can we pull in our existing relationships with our banks? How can we listen to our clients? And how can we put our heads together, try and bring kind of a bit of innovation and a few ideas towards how to kind of promote that evolution of the swap space. So the first one was to create a streaming swap data feed, which I can go into in a second. And that, to be very clear, it was done in partnership with the banks, and it's something we couldn't do without them. So I think part of the swaps journey will be that we all have to work together in this. And that's a great kind of testament to success of relationships, because only on the basis of partnership with these 21 banks, we're able to build this feed. And then of course, that swap data feed then underpins the mid-match platform. So essentially by powering the mid-rate at which point you can then, meet and exchange. It just shows two things. One is how much value we see in the swap data feed. I mean, we're pretty much putting our money where our mouth is, even though some clients may not want to. And we really believe that is the future. But I always say that everything requires time. And I always hear from, I think, from yourself or from many others in the market, they say, oh, we've been waiting for the swaps market to change for years. Be another 5 years, be another 10 years. But the point is that, dripping of water will always wear away a stone. So it's happening. It's just the pace at which that really occurs is yet to be determined.
I've predicted the automation of FX swaps every year for 15 years, and I'm proudly going to continue because one year I know I'm going to be right. So where does the data come from then?
So just again, going back to that first point, all swaps pricing was essentially managed by the banks and then delivered by brokers, really, right? So, and everything's very manual process. Things are priced accordingly to a client. You didn't have the streaming environment. So we kind of rested on our relationships we have with our banks. I mean, 360 has been around for 20 years, so we're an old horse now. And we kind of looked at the kind of portfolio of banks we had, and we selected certain members of the kind of the liquidity management panels and go and speak to them about this idea about setting up a streaming swaps data feed. So we approached them, after some form of negotiation and understanding of what we're trying to achieve here, because it was revolutionary. Not everybody wants to show their hand on the live data feed, right? So I've got many anecdotes of some very hairy conversations, but good ones. And we essentially integrated directly to each of these banks' pricing engines, where we directly subscribe to their rates across the whole curve, across G10, local markets and NDFs.
Right.
And I think that the key is that, and I always stress this, I think independence is really important about data. And we've discussed previously about quality and what it means to be quality and what would actually account for a quality feed. I think independence is really crucial. So, for example, we went well out of our way to make sure that we don't use any existing feed within our network, within our franchise, within our ecosystem to make this data feed. This data feed is constructed on brand new API connections, which are completely segmented away from the business, which means that there is no interaction of data from our execution venue to this data feed. It's just a representation of where 21 banks are across the curve.
Yeah. So effectively, is it across the curve?
It is, yeah. So we have, I guess this is another beauty of the feed. So we have G10 and local market NDF pairs, but within G10, for example, we've actually standardized a lot of special dates like the IMMs, the turns around the year, the quarter, the end of the month, the start of the month. So we actually have 52 standard tenors across a period from overnight to 5 years. And by comparison, broker feeds only have 25. And I think this is why the data has been so well received, in that nobody ever did that. Nobody's really gone to essentially aggregate and create a single feed, because there's not only 21 banks pricing, but across such a range of core tenors, which just it brings forward a level of accuracy to the swaps market, which just wasn't there before.
I guess also there's a competitive nature to it as well, isn't there? Because if you think of your average, if you go back to the days of voice brokers, and even the broking the platforms they use now, they're not getting 21 banks giving them a curve, giving them a strip of forwards or a curve. Normally it's one, and others put interest in around it. So I guess there's a granularity to the data as well, isn't there?
Totally. And one might say, well, what use is a price to me made of 21 banks if I can't trade with them? Which is a very good point. But the point is that you may only have access to 5, but don't you want to know what the general view of the market is, so you can then benchmark those 5 prices accordingly, not just against each other, but against the street view. So that's my first point. And secondly, I think this is a fascinating one. Again, linking to the whole quality assessment of what defines a quality feed, is that we subscribe to the base rate, so the actual house rate from each of the banks, which is exempt of client-specific skew or client-specific credit adjustments. That's quite mega as well, because what a client can do is consume the data, consume all their pricing data from their 5 banks, but then really start to see, okay, so this is the spread that I'm actually receiving from my 5 banks. I can now understand there's a credit element within that. There's a skew element within that. There's a spread element within that. But with having a real form of independent data, how are you supposed to have kind of the tools to understand really what is the price?
We need a starting point. If it's going to be RWA, if it's going to be capital, if it's going to be a markup, we need a starting point for that, don't we?
Yeah, absolutely.
So
it'll be a journey.
Yeah, I mean, how do you deal then with, like, data outliers, or do you find data outliers, as a course of the daily work, I guess?
Data what?
A data outliers, like, as in if someone's quite a way away from the market.
Right, outliers within the data. Yeah, of course. I mean, so interestingly, we as a data provider, it was interesting how much responsibility we felt in delivering a view on this market data feed. So we were very, very, very careful not to stick our alls in to what we're trying to represent. So it really is 21 banks putting in their data across every tenor, across every quote update. And we've done minimal sanitization and minimal kind of aggregation methodology. The methodology we have is to basically touch it as little as possible, because we don't want to kind of have a 360T view of SDF. We want a market view of the swap data. So we do remove outliers. So depending on the number of quotes, we remove a maximum of 3 outliers, and depending on how many banks quoting towards a certain rate, we remove a maximum of 4 spreads. So we essentially remove the noise, but if there is a skew in the price, we want to deliver that skew. We don't want to remove any real value in that data feed.
I mean, that's quite interesting to me, because I mean, something I've often said and argued is that, yes, I buy that data is really good and data is vitally important, and it is the oil that runs our market machinery. But you can have too much data, and if it's too repetitive or it's not a good quality. Are you finding more of your conversations now about the quality of data?
Definitely, but also I can't stress how much we rely on the banks who contribute into the feed. So, I mean, I always saw this as an interesting analogy, I guess, or anecdote rather, from when we built the feed up, is that of course banks were nervous to stream into this because of the IP behind their feed. We have various measures to protect them. The feed's anonymous, no one will ever know who's behind it, but also no other bank will know what other bank is contributing. So there's no kind of risk of manipulation of the rate, which is really important, again, to its quality and independence. And we essentially run analytics on all the data to make sure that the sanity process is sanitized. I mean, I can walk you through the process, but I wouldn't want to put you to bed or any listeners. But it's whiter than white in what we do. And we really do work with the banks who contribute to make sure that we're doing things optimally, and that there is a quality in the feed. But I always say the greatest testament to the feed is that, since going live 2.5, 3 years ago, no bank has pulled out of the feed, meaning, and of course they get this feed in return, the aggregated feed, they see so much value. And if a bank, a market making tier 1 or super regional bank sees value in this data, and they're essentially the proprietaries of pricing and they make the price, I believe that's a great testament to the quality of the feed.
They typically tend to be the toughest customers, I would say, over the years. Talking to people, we'll only whisper that bit though, I mean, so actually, that's an interesting one. So are different market segments using the data in different ways? Is there a difference between buy side and sell side and how they're using it?
Yeah, definitely. And it's been a journey for me, because I personally come more from the sell side. That's where my relationship is from. And that's where kind of my thought process has come from. And in simple terms, the sell side view FX view FX as a cost center or a profit center. The buy side don't see FX as a profit center. And this is the key driver to the investment, to the quantitative approach, and to the growth and I guess utility of that data. So you see that sell side, essentially businesses, are set up and the infrastructure is built around data in a much more, I guess, proficient way at the moment. Although in the last 18 months, I've had some awesome conversations with the buy side, and they really vary across the spectrum in terms of, what they do with the data, how much is already institutionalized within their workflow. But in general, I think the 360T have a view, and you can see this in building of the data feed, the building of mid-match, the way that we've integrated data through so many of our workflows within our software solutions, is that I think there will be a move from a post-trade price verification to using the data, building up some form of understanding, and then feeding that back into the trading process. And I think that's where the evolution really is going to take place, especially within the swap space. So rather than, right now, traders are using data just to qualify pricing, but once they build up a good set of data pool around their executions, their analyses, if they can find a way to, I guess, empower them to make better trading decisions and better kind of trading outcomes, I think that's really the end goal.
It's just starting very much to sound to me like people who are offering algos out there their ears are going to prick up when they hear this. I mean, are we heading for, how do you sort of see the market structure change evolving then? Because from what you're saying there, I'm thinking algos immediately, but obviously there's a lot more to it than that. There's analytics and I guess there's pricing, isn't there?
There is, absolutely. I mean, the phenomenon of data is a pretty recent one, and it is the buzzword. And I mean, I'm pretty sure that everybody in foreign exchange is trying to kind of gain some form of, increase their skill set or kind of understanding of data in some capacity. But it is an interesting subject, because if, even in my personal life and what I do and the way I behave, information to me is a very powerful thing, and it makes me perform better. It's just a natural kind of, it goes with human mentality, right? So I think everybody does get excited about data. And in terms of, I mean, any algorithm is built on data, and you have algorithms within pricing. So, just the sheer formation of a quote is built around some form of algorithm and some form of computer generated process. TCA, the same thing. It's a number of metrics which are hard coded, and there's an algorithm to pick up nuances or anomalies, which will feed back some form of imperative data that you can then use for, to improve trading outcomes. You have, even 360T has a pricing engine, the simple solution used by many of our kind of regional banks, where the data is fully embedded and it will allow you to improve the way you quote clients. So if there is anywhere there's technology, anywhere there's computer generated optimization, efficiency driven kind of solutions, all they need is data. So in my view, the data's there, you've got the want and the technical capability to produce, more algorithmic kind of based solutions. Yeah. I think the algos are just, it's a matter of when, not if.
Yeah. And I guess then the interesting challenge for particularly, I guess, the sell side is going to be how they sort of blend that sort of human and technology resources, because, I guess, there is a risk element to what we do still in FX swaps that data can, I guess, evaluate, but actually can't take the decision on. So I guess it comes down to the winners in this game, probably will be those that can take the data and actually have a trading desk that can use it. So which I guess what I'm getting at is we'd probably like to see the GUI continue to be quite an important part of the FX swaps market, aren't we?
I think so, but we mentioned the word quality of data, but I think it's also about accessibility. Yeah. And I think part of this phenomenon of data, which is kind of in everything we do in our personal lives, our daily lives, our commercial lives, and our business lives, is that, the data feed that we have anyway, the swaps data feed, is available to all. I mean, our white paper, methodology, everyone can access it. We would not turn anyone away. So we sell the data to our corporates, we sell the data to our hedge funds, to the banks. And I think that's a really important step within the evolution of swaps, that we kind of take everybody on that journey. And everyone may have different perspectives in what they want to achieve, but I think it's important that the data should be available for all. But to your point, to what degree are people going to be able to utilize the data? I think that falls into the camps of the fact the sell side do have more resource, because, there's a profit center around that. Whereas there might be a requirement for more of a regulatory change, or maybe a different impetus kind of driving the buy side to use data and to embed it within their solutions. But Colin, there's ways of doing it. And for example, we offer, there's one solution for buy-side clients where they can sanity check every single price before they execute according to a mid.
Yeah.
So you're essentially using data to drive your trading decision automatically without doing much, right?
Yeah.
It's such a simple, they always say simple things are the real genius ideas. I think you don't need to complicate things too much. And I think that's a great first step, but there are some other buy-side managers who are doing some really, really juicy, complex stuff. I mean, they're getting involved in AI, they're hiring quants on their desks. So that move is happening. And it's exciting to see. It's definitely, you see kind of a new of minds, of skills, of focus within the markets.
I certainly think we will be looking, and for once I do think I'll be right on this. I certainly do think we'll be looking at a very different FX swaps market in maybe 18 months time. And to your point, I like your point around what the buy side is going to be doing with it, because the buy side, although they don't tend to be that proactive on a lot of these things, they do drive a lot of change. Yeah. So I think
and there is so much like room for change, but really great projects. I mean, I know you speak to many of the buy side members as well, and it's very interesting stuff. And if you really look again, if you take a step back and you think what the buy side are there for, ultimately they're there to improve the trading outcomes for their stakeholders, for their shareholders, right? So that there is an end goal, and the end goal, I mean, FX is, I know, just a conduit of all the various kind of asset classes that we trade in, but it's a very important one which could adapt, and I mean, so many efficiencies can be brought with data. So I think it's an interesting journey to watch over the next 18 months, 2 years or so.
And I look forward to watching it. Assuming these things still work. Yeah. Lydia, thank you very much for your time, and thanks for joining the Full FX Unfiltered.
No, really good chat.
And say good luck with the swaps data feed. I think it's going to be a big part of our industry going forward. And so thanks again, and thanks everyone for watching. And I guess we'll be back again fairly soon.